Good afternoon, everybody, and welcome to another edition of ChartWatch Live. My name is Capolingua. I'm from Market Index and Livewire Markets, and it is a pleasure to be joining you on a Wednesday, warm, sunny Wednesday afternoon here in Perth to talk about markets. Going to get to your request very soon. I'm going to do a bit of a lithium sector review because it's definitely topical. It's in the news this morning. But before we do that, we're going to talk about how much I like to fill my bucket in terms of portfolio risk, and then obviously we'll get to your requests. Let's head over to the AMI broker screen and start with the Nasdaq Composite. Had a few questions during the week via email just asking, hey Carl, why do you look at the Nasdaq and why don't you look at, say, the S&P 500? And this is my answer. The Nasdaq has way more stocks in it. It's got about 4,500 last count. Maybe it's closer to 5,000 now, I don't know. But it's got way more stocks than the 500. Now, having said that, they're both largely moving based upon the bigger stocks because they're both market cap oriented, but there is that greater diversification. Plus, the Nasdaq tends to be higher growth, higher PE. It is the coalface of risk taking when it comes to stocks, and stocks are some of the riskiest assets you're going to ever want to invest in anyway. So what I'm really looking at here in the Nasdaq is the appetite, is global appetite for risk. And it's obvious then that that's going to come back and affect anything we might do here in good old Australia. So I do like to see double greens here. That is the short-term uptrend ribbon trundling along as it is at the moment. Long-term uptrend is good. Double greens means we're in a bull market. Also like to see rising peaks and rising troughs, and technically we don't have that at the moment. So not ideal. I mean, if we get double greens on the trends ribbons are rising, they're supporting the price as we go up. You can see that's also very important because when they stop supporting the price, if you've been using my trend ribbons, you know that bad things tend to happen. So still supporting price there and rising. And then the price action ideally is rising peaks and rising troughs. And we're not at the moment. And then we want to see predominance of demand side candles. And we're probably a little bit 50-50 on that. So we're not getting a 10 out of 10 score. If we had them all, we'd be 10 out of 10. And we'd be saying total demand side control. We'd be saying full risk position. Now, full risk position is how much risk I can fill my bucket. To use this analogy last week, this is not how you pick individual trades, everybody. This is how much risk, how much of your total portfolio you can risk overall. It's my model. If you want to use it, you're welcome to, but this is how I do things. And depending on how strong the broader market is, that's obviously I can fill my bucket more and more with more risk, so to speak. If the market starts to turn down, then I've got to pare back that risk. I've got to let some of the risk out of the bucket. I think it makes a lot of sense in terms of keeping us safe in those major market downturns. In theory, we should have very, very little risk allocated at all. And then we're quite happy if prices are going down in that case. So look, very, very strong. Could be better is what we're going to say here. If you've been reading my Market Index ChartWatch articles, you'll know that we are still FRP there, or full risk position. That means the bucket can be filled if you want to. On the Aussie market, we're at a half full bucket. How about that? So it's great to see, I guess, this in practice where the Nasdaq might still be a full bucket and the ASX 200 is far from thus because, again, with the downward, I guess, price action here, so we've got lower peaks and lower troughs coming in. Actually, to be fair, this last little bit is trying to reverse that, so that's encouraging. But we can see the trend ribbon straight away. That's the first thing that probably strikes you as different. We've got a pink trend ribbon there, so we've actually got a short-term downtrend. Long-term trend is still up, okay? But in the shorter term, the traders, let's call them, trader sentiment is, I was going to say neutral, but it's starting to be a little bit bearish. And then we've still got longer-term investor positional traders still fairly positive. I like strong trends. That's when I get the best trades. That's when I get the lowest risk trades. We're not exactly a strong trend here. So for that reason, I'm at half R, or bucket half full. When would I move back to a higher risk setting here? So I usually go from half to 2/3 and then to full risk position. I want to see us at least close above that short-term trend ribbon because we do tend to find just as much on the way up that the short-term trend ribbon tends to support the price or act as like a trampoline, I say, offering this dynamic, because it's moving, dynamics moving, and this excess dynamic zone of excess demand. On the way down, it can impede the ability of price to rise, okay? And this is just an example from back in March, but you can see very clearly here that once we hit that short-term trend ribbon, it wasn't long until we peeled away on the downside. I'm not saying that's going to happen now because I don't know what's going to happen next, ladies and gentlemen. This is the thing you need to know about me. I have no idea what's going to happen next. I make my best decisions, the best decisions I can, based upon the probabilities associated with the technicals that we see on screen. And that's telling me to be 50-50. I'm still invested, but also still a decent amount of cash here at this stage. If we were to close beneath 87.31, okay, that's when I would be moving to the next lower risk setting, which is only a third invested, so 2/3 in cash, and say la vie, see what happens after that. I hope that doesn't happen. I hope we head back up and we're adding risk very, very soon. So this frames our analysis going forward, doesn't it? We're going to go to your suggestions, both offline and online, but this should, I guess, give us a broader idea of how we might want to be treating risk. Notice I talk about risk all the time in these sessions. This is not tune into Carl and learn about the best stuff to buy. This is tune into Carl and learn about how to manage your risk better. Hopefully that's the way you look at this. I wanted to start off because I had a question from James about ELV and WC8, which are two lithium stocks, and obviously Mineral Resources in the news this morning because it's sold its lithium operations to POSCO just as lithium prices are starting to move up, of course. Held all the way down, and now they're selling when it's going back up. Actually, let's head over here on that cheery note and have a look at the lithium carbonate price. Actually did get an email during the week about this particular price, and a few people asking, hey Carl, where do I find this chart on TradingView? And you can't find this chart anywhere else because I've been keeping this chart manually. So each day, now I have some tools that help me automate some of this process. But each day I get the data from the Guangzhou Futures Exchange, GFEX, in China, and I collate it in some spreadsheets, and then I upload the data from the spreadsheets into this chart. And I've been keeping it since day one. So these futures started trading on the 21st of July 2023. And I back adjust them, I roll the contracts as new contracts come out. And I'm going to say I'm the only person on the planet who has this chart, particularly with my trend ribbons. So that's pretty neat. Why lithium? I developed a bit of an interest in lithium back around, it was certainly on the way up. I remember on the way up, I was working for a different company at the time, a stockbroker, and I did very similar webinars to this, and we had lots and lots of buying opportunities on the lithium sector on the way up. But then the trend started to change, and you could probably go out and find some videos somewhere on the internet where I say these things. Hey, everybody, the lithium trend is changing. Just letting you know, because this is what I had to look at the time. The trend ribbons are starting to go from double green into amber here into pink. No big deal. But hey, everybody, hey, everyone, so there's some stuff going on here in the lithium market that's not so good anymore. It's pulling back more than it should if it's in a healthy bull market. And then I wanted to say, by there, I'm actually starting to get pretty bearish, for obvious reasons, and certainly by here, completely bearish. And you can go and check the history. Stayed a bear for this entire time. Hey Carl, how did you know the lithium price was going to go down 90%? I didn't. I had no idea. I just followed my trend model. I just did what the ribbons told me to do. Hey Carl, you didn't tell anybody to buy anything that whole time. How did you know not to buy any lithium stocks? I had no idea. I just followed my trend ribbons. I don't know anything about what's going on in the lithium market. And then obviously we know what happened. Now around about here, I went on holiday. I don't know if you remember, and it was like I left the country and the lithium price was free to go up, and it had a bit of a rally. And if you've been following the ChartWatch scans list since about August, lithium stocks have been appearing. Well, if we're going to look at the lithium sector, let's look at the lithium price. And we had a look at the spot market there in lithium carbonate. This is the futures market. So the spot market's been around a lot longer than futures, obviously. But now I tend to look at the futures market more because it's the liquidity here is actually becoming very, very good. And it's doing all the things I would want out of a turnaround setup. I don't know if you remember a few weeks ago we talked about this concept of a turnaround setup. So I have continuation setups, I have turnaround setups, I have aggressive setups. This is the turnaround setup for obvious reasons because we were previously in a very well-established trend, in this case a long-term downtrend. And then obviously for me, I can't do a single thing. Well, I can't go long. I can certainly go short. I'm shorting the hell out of lithium stocks all the way down. But I can't even contemplate buying a lithium stock until we at least get to amber here. Ideally, the price starts to get back above the long-term trend ribbon. This was some wild stuff going on there. Combination of short covering, combination of anti-involution themes, combination of closures of mines as part of that desire by the Chinese government to prevent this rampant oversupply of particular commodities, pulled back, pared back. And I think the key is this, the fact that we didn't end up anywhere down here. And that's a pretty good sign that the demand-supply environment is transitioning from a clear supply-side dominated phase into more of an equilibrium phase. And then we want to see a sustainable move above the long-term trend ribbon. And then the most important thing for me is nothing ever moves in a straight line. And I love to see the tests. I love to see the pullbacks, because certainly when everything's hot and everybody's rushing in, that's great. But what's more important to me is how that demand side responds when they get challenged, when there's a bit of supply that comes into the market. Do they just completely crumble like they did time and time again, crumble, or do they actually stand and fight? And it's that stand and fight that becomes interesting for me, because not only are they standing and fighting, but if we could take out that supply, and we have done it here, I guess the market is telling us that supply is actually diminishing here and demand is building. So I think that's the situation we're in. I called a bull market in ChartWatch markets a little while ago, a few weeks ago, and reiterated that. I want to say maybe even on this candle here. So I think the outlook for the commodity is constructive. I don't know where it's going to be. I can't tell you if it's going to go back up. It fell 90%. I can't tell if it's going to go back all the way. I wouldn't have a bloody clue. I'm sorry, I can't tell the future. But all I know is now, in my opinion, more often than not, capital M, capital O, capital T, capital N, the price of whatever that thing is, it's irrelevant, isn't it? We're just looking at demand and supply here. That's all my charts are, schedule of demand and supply. If demand and supply looks that way, more often than not, the price tends to go up. Now, I know this is a problem for some people, because some people go, geez, Carl, mate, I kind of get where you're coming from, mate, but I cannot deal with this more often than not business. I need certainty. I need to know if something's going up before I put my money down. And you're in the wrong place. You might as well just switch off now and go get onto YouTube. Really great. There's so many experts on YouTube that will tell you where the price is going. TikTok, I'm finding, if you're a younger person, you might enjoy looking at TikTok. Just so many financial experts on TikTok that are going to give you just the best advice. But if you want somebody who's going to say, I have no idea where it's going next, I'm just making my best guess based on what I see, then you've actually come to the right place. So Mineral Resources here. We'll just start obviously with one of the news. Short-term uptrend, long-term trend is transitioning to up, so I think that's pretty handy as well. So there's not a lot in this chart I don't like. There's some volatility there. Lithium is a volatile game, and that's just the way it's going to be. But otherwise, it's still rising. It actually is still rising peaks and rising troughs. Apart from this little phase here, I would say predominantly demand side candles. $50 we might see a little bit of a pause, because it's just a place where the smarty pants that bought it probably 25 have doubled their money, or $20. See, I told you, I knew it was going up. Okay, congratulations, Mr. Smarty Pants. But I tell you what, if you were buying on that day there, my opinion is you were not on the right side of more often than not. Okay, but Carl, it went up. That was clearly the best place to buy. Why weren't you buying it there? No, in fact, I was probably short on that day. Well, because that day looked a lot like this day. And that day looked a lot like this day. And it looked a lot like this day and looked a lot like this day. Hey, it rallied there as well, right? Should have bought it there. Well, they looked a lot like this day. See, people focus too much on that one time that it rallied, or those two times that it rallied, and then just ignore the 54 other times where it just kept going down in that scenario. So once again, there's nothing I could have done on, there's an aggressive setup. We're not going to go into that now. Okay, maybe we'll do that another day, where I can start to entertain buying things beneath the trend ribbon based upon very, very strict criteria. But ideally, we're looking around here and here as the place where we're looking to get involved, certainly around here. And I could wax lyrical all day about what you could have done, but rest assured, I don't just talk about what I could have done. I do try and help people by doing my scans as well. And this is every time it's featured as an uptrend in my ChartWatch scans, and every time it's featured as a downtrend. So you can see here that as late as June, it was still featuring as a downtrend 41 times up to that point. And I probably don't need to tell you that through this phase here, starting at $55 and then falling to really as low as $16. You can see there the model was considering it a downtrend. But no downtrend lasts forever, as we can see. And then basically from August, there's a period where it doesn't appear in either scan from the end of June to the start of August. That's how quick things can turn. And lo and behold, we can see there the 5th of August, we have our first feature. That is a high conviction from a high conviction demand side control, 32.94, and now it's $50. Whoopsie-doo. Aren't I clever? That's not what this is about. This is because it's irrelevant. It's irrelevant. That outcome is irrelevant. All that's relevant is, was there a system that one could have followed for you to create those same outcomes? And everything I do is black and white. I teach you how to do it, and then I apply it in ChartWatch markets and ChartWatch ASX scans. So we can see around about August, true to my word, that's when it started to appear. It's appeared several times since then. I think I put it in yesterday, didn't I? So there you go. That's Mineral Resources. Let's do a quick whip around the grounds on the rest of them. Pilbara Minerals, and I won't go back to the spreadsheet, but I can assure you it was starting to appear, I think, pretty early around here. You might have taken some risk off the table. We know how my model works. It's plus R equals R or minus R. I think we actually discussed this a little while ago in these sessions around about here, and I said plus R at that stage. We've changed some of the labelling there to just be plus R to make it simple. And I think actually it was certainly a feature here and certainly a feature here. That's all the past, Carl. You know, I don't care what you did in the past, mate. Just tell me what to do now, please. Okay, I can't tell you what to do now because it's not my job. This is all very general advice. I'm just teaching you how my model works, but my model sees, I can tell you what my model sees. My model sees short-term uptrend. My model sees a trend that's transitioned to up. My model sees higher peaks and higher troughs. My model sees a predominance of demand-side candles. And therefore, my model considers that more often than not, the price will tend to rise. That's all I know. And therefore, based upon that, if you've got it, I'm happy to hold the risk that well, if I had it, I'd be happy to hold the risk I have. I've got to be careful what I say. And if I didn't have it, yeah, look, I'd be happy to add risk. Maybe not in today's candle, though, with a little upper shadow. But today's candle's not closed, so we don't know. So forget today's candles there. I mean, we should do that. We should say that every week. Forget today's candles there and just really work off yesterday's candle. And yesterday's candle was definitely a plus R candle. So Mineral Resources, Pilbara Minerals, we won't go through them all, but we'll do a few. And then if you've got a few that you want to talk about, we can always do that when we get to the request. Liontown Resources, ditto. It's been in the feature charts a few times, not as many as the other ones, because you can see the trend is far more volatile. But it has been in there recently, so I'll just go ditto on that one. I shouldn't have to go too deep into the rationales, I guess, because we've kind of covered it, which is good for the rest of the presentation, but happy with that. And then let's do IGO perhaps. That did get in. I think the last time we looked at it here, we said equals R or happy to hold the risk we have. I'd go with that. In fact, it's actually looking half decent, bouncing off that long-term trend ribbon for a plus R. Well, let's just go equals R first and then a plus R. Let's just make sure that candle's closing the way it's closing today first, because this has been the laggard. And, you know, I always struggle to buy the laggard, to be fair. I like to go for the leaders in the space. I know some people love the laggard. They go, oh, everything else has gone up, but this hasn't, and I better buy this. And how does that usually work out more often than not? Oh, why didn't I buy that one? Why didn't I buy that one or that one? Oh. I never get the good ones. It's not fair. Why is it always me that misses out? Well, maybe it's because you're consistently buying the laggards instead of just buying the winners. There's a reason why they're winners, demand and supply, remember. Let's go. I'll just do ACDC because this was the first one I put in. And I'd obviously been on holiday. I saw that turn in the lithium price, and that was the one that on the day threw in that candle at the green ribbon. You can go back and check that edition of ChartWatch. And I said, I've got to get something in for lithium because of that turnaround. And I don't think any of the other ones had fired yet. So this was the first one I put in there as early as the end of September. Carl, you're crazy, mate. Why didn't you just buy it down there? Because I more often than not didn't exist. More often than not, going up didn't exist there, but it did a little bit later on. And look, it's up there with maybe an IGO. It's maybe lagging a little bit. I think I did put it in though. I want to say on that day there I ran it. I don't think I ran it as a feature chart, but it's certainly starting to appear in the broader scan list. And maybe I think I put it in there as well. I put it in last night. So on the basis that it is in the broader scan list. And this is a very much a turnaround setup. For me, the ones that look like Pilbara Minerals, again, the leaders, Minerals, I talked about those clean trends, right? They're the ones that I think because they have clean trends, we've got this greater consensus. I mean, I've said this to you before, trend followers are after consensus and just total consensus, where the demand side only thinks one thing, and they want to own shares. They do that by converting cash into shares. And the supply side, all they want to do is own shares, and they do that by holding on to their shares, right? Here, I think there's less consensus. Those consensus trades are generally the continuation trades, double greens. Here, we're grappling. The market is still grappling with the old consensus, which was very much supply side control, equilibrium, and now we're tentatively moving up. Doesn't mean we can't buy these. We just have to go into them understanding that they're slightly higher risk, than the other ones, in my opinion, anyway. The more often than not is not as often, potentially. But that doesn't mean they're not valid setups. They're valid setups. They're just a different risk setting. That's all. So happy with that one, James, ELV. I am. What you do with it is your business, of course. This one hasn't come up yet. And if you have a trained eye for what I teach you in these sessions, and after probably 4 or 5 weeks of me doing these, I guess you're probably getting more of a trained eye. Hopefully it's just instantaneous. You just look at that and something imprints in your brain and you go, no, I don't think Carl's going to like that just yet. And I don't, because I still think a few things need to happen. I'd love to see some demand side price action. So rising peaks and rising troughs. We've had falling peaks and falling troughs. We've had a predominance of supply side candles. I want to see a predominance of demand side candles, but at least we're doing, we're starting to do the right things at the long-term trend ribbon. And you can see that, I could not have even contemplated it through here. It was just not even a possibility, but now I can. So I guess on this one, James, I could go as far as equals R, but certainly I cannot type plus R on the screen just yet. I'm happy to wait. I don't need to buy things at 12 cents. I don't need to buy things at the bottom. There was a time in my trading life that I did. I needed to get in at the bottom and I needed to get out the top. Now I don't need to get in at the bottom. I just need to get in when MOTN equals true. Okay, it's just a binary equation. I need to get out when MOTN equals false. That's it. Let's go to Andrew, who's got MTM, offline request. Don't worry, we'll get to you online very soon. Yeah, look, not terrible, Andrew. And his question was sudden drop comments. I've got no comments on the sudden drop. There was a sudden drop because all of a sudden there was way more supply than demand. And if that's not the response that you prefer, then go find somebody who's going to give you a response about the fundamentals. Okay, why was there a sudden drop? More supply than demand. But could we have, I guess, not predicted is the wrong word, but I guess tracked along with what the market was doing and had signals that the demand-supply dynamics were changing from an environment of excess demand side control into equilibrium, which is where we have to go. We don't just go demand side control, supply side control. We go through equilibrium first and then into an environment of supply side control. This candle is a big deal. That's a big black candle. It was even at the time. So that tells me there's all of a sudden, for some reason, and particularly the gap up, because the way that candle forms is it opens up here. So at this, up to that point, everybody's going, here we go, 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 here we go. We're loving life, right? On Metallium. Fantastic news, probably. I don't know because I don't care. But probably some fantastic news. Everybody's just cheering, celebrating. We are going to make $1 zillion. And what happens by the end of the day? They're so certain. Bang, great trends, open high, great news. By the end of the day, they're going, wait a second. What? No, really? Look at the volume. Look down here. We've got the optimized true range. You can use average true range. We've got volume, and we're just checking what's above and below average. Simple stuff, right? Don't convolute. Please don't convolute your charts. And I've seen this. People send me screenshots. Oh, Carl, put your trend ribbons on and ask a question. And underneath it, I see the RSI and the stochastics and the MACD, and I just go, oh no, my poor trend ribbons. Being forced to hang out with those completely useless indicators. Please, that's the one condition. Okay, just do it for me. If you're going to use my trend ribbons, please take all the other crap off your screen. Keep it simple. Have I got above average trends, price action, volume, upstairs? Downstairs, is something interesting going on? Do I have above average volatility or below average volatility? Do I have above average volume or below average volume? Am I beating the market? That's all we need to know. That's all I need to know, hey. So something really special happened here. Not the great news that came out, but the supply kicked in. Everybody's rushing in the door, saying, give me more, give me more, give me more, give me some. And the supply said, yep, no worries, you got it. So that's a really nasty candle for me. Personally, for me, that's enough to just take some off the table, because remember, we're not talking about getting all out. We're not, like, blasphemy, Carl. Sell some Metallium shares? Carl, let me tell you about how good Metallium is. I'm just going to go over there and do some Duolingo on my phone, because I'm learning French at the moment with my daughter. But sure, you tell me all about it. All I know is that a whole heap of demand got tagged. They came in, rushing in, and they got tagged big time by the supply side. And it's not just the supply side coming in, it's their motivation. Because look how motivated they were to knock out. These guys have been waiting. They've been waiting for that announcement. They knew that announcement was coming, and they were waiting for you to come in with all your liquidity to sell to at an amazing price. So for me, I'm going to say, look, that's my first minus R. Big black candle, massive volatility, massive volume. I don't want this to be subjective. I want this to be as objective as possible so you can follow along. That's not bad. That's still a good candle. Do I need to minus R on that day? Because really all I need to ask myself now is minus R equals R plus R. Well, it's not. I don't think we're plussing R at this point, are we, given what just happened? I don't think we need to minus R. So I guess by definition, I'm equals R on that day. Ooh, don't like that, because we're seeing, as much as there's still a lot of demand, there's still decent demand coming in, but the supply side's coming back in, working away at that high. See, the problem with this, here we go, so you've got a bunch of demand now caught in up here. Okay, there's a bunch of Johnny and Jenny come latelys that all the way up said, I can't buy Metallium. Can't buy it. No, too expensive. Gone too far. Moved too far. Ridiculous. Can't buy it. Oh, I knew I should have bought it. Why didn't I buy it? Oh, I never get the good ones. That's it. I can't take it. Oh, I'm getting in. Boom. That's the top. Why did I buy Metallium? Please, God, if you just let Metallium go back up to $1.40 where I got in, just let me break even on this one, mate, please. I promise I'll get out and I'll never trade Metallium again. So the theory is here, you've got a bunch of people come in late that once on that day, they're just saying, please just let me get break even. So we say that creates latent supply back up at that peak. And what we're watching for now, we think it's there. We don't know it's there until we see the candles. But that is the manifestation, I believe, of some of that supply coming in and working into the market. But it's not all over here. I'm going to move. I need to keep moving. Because I want to get to here. Ladies and gentlemen, Your Honour, I rest my case. Can you possibly ask, like, could the universe possibly give you a better signal than this? Now, before you met me, you didn't know this was a signal, right? It just was, you didn't even look at the candles. It was just up or down on the day. And probably on that day, actually it was up a little. And you checked your Metallium and said, oh yeah, that's all right. No worries, Metallium's still looking pretty good. But now you know that upward pointing shadow is telling you there is latent supply. It's decent supply. Look at the volume, look at the volatility. That is, you cannot get a more obvious minus R than that. And then, ladies and gentlemen, if you're still invested after this day, then you're either not looking at candles, you're not following trends, you're not following price action, you're just oblivious to these things, which is possible because most people are. So look, that's the way I would have played it. I know it feels like hindsight, but hopefully you all agree. I didn't just make this stuff up today. I've been teaching this stuff day in and day out for as long as anybody's been reading ChartWatch. Which brings us to where we are now, which Andrew wants to know. So, Carl, what would you do with Metallium? Well, Andrew, I wouldn't have I wouldn't have a clue where it's going next. But let me say that I'm still comfortable at ZRP. I'm not looking to add risk at this stage. I might be interested if it starts to interact with the short-term trend ribbon, starts to get above that, higher peaks, higher troughs, some decent white candles. It's at, look, big tick here. It's holding the long-term uptrend ribbon. Of all the places it could have pulled back to and bounced from, that's where I like to see it happen. But it's still very early days for me. Let's go to Perry, who's got CXO, which I guess fits in neatly with our lithium whip around the grounds. And look, actually, I'm pretty sure I put it in on that day, if I'm not mistaken. That's the first appearance, or maybe it appeared here, I don't know. But it has been appearing in the uptrends scan list, so that one seems to be tracking along as a turnaround setup still. But yeah, look, I don't mind it. Is this the leader or the laggard? I think it's falling more into the laggard camp. But even the laggards, I guess, what do they say about every dog having their day? Kingsley, I'm only going to do one of yours. Let's do TEA because that's a really nice chart. And this has been in so many times in ChartWatch ASX scans, so many times. As you can see, it is the epitome of demand-side control. There's a picture of demand-side control. Now, hey, could it do this tomorrow? Could it go bloop? And I don't know. Trading halt, profit downgrade, AI has completely destroyed their business model. I don't know. Possibly. Anything's possible, but it's not in the chart right now. The people in the market who are trading this, they can't see that coming, because if they could see it coming, all right, if they could see the bad stuff on the horizon, it would probably look more like this one. Actually, that's Web. I didn't mean to go to Web. I meant to go to TWE, which is the other one, which has regular profit downgrades. We talked about this one last week when we talked about short selling. There we go. Web's not that good either. But there, I think that's a profit downgrade, isn't it? That's a profit downgrade. That's definitely a profit downgrade. Profit downgrade, Treasury, profit downgrade, Wine Estates, right? So my point is with TEA is that if there's some bad stuff happening, market participants don't know that yet. Okay, because generally they do. And you don't know it, of course, you never know it, but generally the experts do. And there we go. Happy with that one. That's the offline requests. Let's get to your online requests. Hopefully you're still with me. You haven't got so bored that you've either nodded off, drooling into your keyboard. And with lots of people saying hello, which is wonderful, hello. And then we're going to AZJ for Charles. AZJ, which is Aurizon, which is actually starting to look pretty good. And I'm curious, now that I look at that, because I look at a chart like that and I go, well, I wonder when did I first put that in? It's a turnaround setup. And only a couple of times. Okay, so once in August at 333 and once in October there. 21st of October at 350, so obviously heading in the right direction. 17 times as a downtrend from 360 to 292. So another interesting turnaround setup, and just to show that, well, there you go. You can see, downtrend, feature chart, and then what did I say? Maybe once in August, maybe on that candle, and once in October. So look, it's on the right path in terms of it being a turnaround setup. I like the short-term uptrend. I like the fact that it's a turning around. I like the fact that the long-term trend ribbon, you wouldn't believe it, would you? I mean, if I told you that this long-term trend ribbon, you would not believe it could be possible, that the market could be that simple. I still can't believe it. I can't believe it. I'm very lucky that I stumbled upon this methodology. And everything seems to be doing its job, doesn't it? Predominance of demand-side candles, price action is pretty good. So on that basis for you, it is, I should say, Charles, I think it was, equals R and plus R. And I know once we know how this works, I think these sessions get a little bit boring, don't they? Carl looks at the same trend ribbons, he looks at the slide. Because if we were doing a different type of webinar, I might tell you about what the company does and all of those useless things. Vanek Gold Miners. Okay, well, remember we're back at an ETF. I'm not saying don't ask me about ETFs, but the ETF, its demand and supply depends on the constituents that it tracks. So we might be better off looking at some gold stocks. How about we do that instead? Is that fair to say? Why don't we do that? Why don't we have a look at, say, the top 5 off the top of my head gold stocks, a bit like what we did with lithium. Okay, well, surprise, surprise, the GDX looks exactly like the Newmont chart. Who would have thunk it? I think I put this one back in. So we went back, so obviously it was in a zillion times up to there. It hasn't been in, I think, since this day here. I'm pretty sure I put it in there. Let me make that into an arrow, and I could go back and check, but I think we want to keep moving. But I'm pretty sure it was that day it got back in on the basis that we're back above the short-term trend ribbon. Okay, so again, I don't want this to be subjective. I want this to be objective. So you can say, yep, I can see what I see, and that tells me what I need to do. Back above the short-term trend ribbon, back into rising peaks and rising troughs. Okay, you can see that. Long-term trend obviously still up, and not only have we got back to a predominance of demand-side candles, but we've actually got a really, really solid demand-side candle on that day there. Okay, so on that basis, now I am worried about in these ones. Okay, this is not a turnaround setup, it's still continuation, but it's got elements of that turnaround setup where we should be keeping an eye on the price action around that. Well, that's really a major point of supply now, isn't it? This point of supply here. And that would be my only concern here, if you could call it a concern, is that we should expect some price action around here that will suggest there's some supply coming in. But we're still a ways away, and we'll deal with it when we get there. We might not get it either. Maybe the gold price is rallying so strong that the supply doesn't even want to interact with that area. And we'll know when we get the candles. Black candles, upward pointing shadows, they are the fingerprints, ladies and gentlemen, of the supply side coming in. Black candles, upward pointing shadows. Why do I keep harping on about those? You know how many times I type a week? Black body candle and upward pointing shadow, right? How many times do you read it a week? Well, because there can be no other way that supply comes into a market without creating black candles and upward pointing shadows. Just replay that sentence in your head. There is no way that supply can enter a market without creating black candles and upward pointing shadows. As this control develops and or as the demand side withdraws from the market because they're witnessing, they're experiencing this supply side interference, we will move into lower peaks and lower troughs. There is no other way that can happen. And then we'll interact with the trend ribbons and then they'll turn. What did I say I was going to do? I was going to do a bit of a whip around the grounds here. Northern Star, I think, is still pretty good. I should have gone, did I write it? I can't remember if I wrote on the last screen about equals R. Look, I'm still plus R here. I know the last two candles aren't ideal. You might want to wait for the next demand side candle. Nice full white bodied candle or downward pointing shadow. So that's Northern Star, everybody. Let's go zoom normal. It's important. We'll go evolution, mining, which is a ditto. I put it back in on this day here for all the same reasons as Newmont. Back above the short-term trend ribbon, strong demand side candles. What we didn't have here was, I guess, the rising peaks and rising troughs, but I felt the price action was strong enough. This motive phase through here, and we've got a bit of proximity there to the high. So look, again, don't mind that one, and maybe we'll do two more. Equals R and plus R, and hopefully I'm answering some questions along the way here. Where should we go next? I think VAU looks pretty good. Again, a very strong demand side candle here. I know it's been quite quiet since then, but still a picture of demand side control. Are people getting out of this in droves? No, everything else looks pretty good. PRU, and maybe we'll finish on there. And this is a really good place to finish because this also got back in. But again, when I take these types of trades, I'm always mindful of what might happen at that major point of supply. And remember what I just said, that the manifestation of that excess supply, the people who got in here, not all of them, but some of them will feel this way. Down here, they're feeling like they made a big mistake. In here, they were totally confident. They thought gold's going up forever. Down here, they're wishing they never bought ever. Was it Perseus Mining? Some of them are going to want to undo that mistake, that feeling of having made a mistake, and that means getting out as close to break even as possible. Now, here's the irony of it, right? If you think in that fashion, you get in here, down here you regret it, and you want to break even, right? So in order to achieve this much gain, some people will hold on for bloody ever, okay? So in terms of their reward to risk, like they will never sell it until they get back to break even. They just won't sell a losing trade. And if you're doing that, you're saying, well, that's my upside, and my potential downside is this. Oh, Carl, it'll never go down that much. Really? Won't it? But that was the last time the gold bull market turned into a bear market. Won't it? So I just think that logic is so faulty, and can I say stupid, to think that as soon as it gets back to break even, I'll get out. But yet, if it goes down, I'll just keep holding it. But I don't need to tell you. I think I'm preaching to the convert on that. Okay, that's the gold whip around the grounds. Let's keep moving here. And hopefully I've answered your question, Bruce, for GDX. Elijah saying, can we check out Liontown? Yep, done that. Mineral Resources and PLS, done that. Let's go to ILU as well, which we've got some issues. I'm not going to go through the whole case study here, but just pointing out that giant upward pointing shadow, the gap, the supply candle, and I'm guessing on that day we might have had a bit of volatility and a bit of volume. Yes, we did. So this comes back to that logic. We looked at Metallium, very similar there, and that's still a very strong candle, but then that kind of tells you no, the demand side cannot withstand the supply side anymore. For me, that's the big minus R day, and then that's the second one. When you bounce, and it appears like a strong bounce, but then we fail like that, that's so telling. And then the next one there. I think I'm ZRP by there. That's me personally, but I'm usually moving on to the next thing. You might want to keep a bit of risk on the table, just on the basis the long-term trend is up. But that's not me. So for me, I'm a ZRP on this one, and I will put it to you. Is there any reason, based upon the recent price action, the recent candles, and the recent downtrend for Carl, forget you, I don't know what you would do, but just say, what would Carl buy that one? And I think we all know the answer. Carl's not buying that one. For better or for worse, and I don't know, could this be taken over tomorrow by the US government? Maybe. Or the Chinese government just comes in, state-owned entity, and buys Iluka. Probably wouldn't be allowed to. Could do. And here I am saying, nope, I wouldn't buy it. Oh well. SOL, this one's for Mark. And this one has actually been in the downtrends list, Mark. So just be careful, okay? I'm not telling you to do anything. That's not the purpose. I'm telling you to just be careful, look at the trends, look at the price action, and make your own decision. But we can see where things started to not be right. I mean, could you get a more telling cluster of black candles? And I know there's a lot of this going on, isn't it? Oh, how did I not know about bloody candlesticks before? I mean, they were there. I knew they existed. Why did I not bother just to learn a little bit about them? Short-term downtrend, interaction with the long-term trend. Long-term trend turns neutral. Short-term trend ribbon now impeding upward price action, acting as a zone of dynamic supply. Predominance of supply side candles. Today's candle is an up candle, but it's one of few up demand side candles, I guess, among many supply. And I will say this has been on the downtrends list for a little while now. So that's all I'll say. Again, this is about what I would do with it, not what you would do with it. You make your own call. For me, I'm ZRP. I think that goes without saying. But also, I think it's a candidate here for minus R in terms of, and I'll just put in brackets here, a short trade. Okay. Blasphemy, Carl. This is Australia's Berkshire Hathaway, Carl. Okay, let's go to Ryan. Ryan's got SEEK, SEK. How am I going for time? Not bad, better than I thought. SEEK's got some problems, unfortunately, Ryan, as far as my model goes. And obviously we've got short-term downtrend. I shouldn't have to tell you that now. These things should be self-evident. We're interacting with the long-term trend. Not exactly bouncing straight off it, are we? And that's a little bit concerning, but at least the long-term trend's trying to do its job. It's doing its best. The price action, draw this in for you, is so tried to hold the uptrend. That's where the uptrend broke. You can see this is the point here where I'm not only reducing risk, but probably getting very close to ZRP. And certainly I think by that candle, my model, it just has absolutely no reason to still be in it. Was there? Well, there is one in there. There's there, and that's not one. That's not one. Inside candle, outside candle, and then down to here, and this is actually still going as well, that last trend. So whilst it actually appears that there is a higher peak in the system, once we take this out, once we take that level out, it's irrelevant. We have got supply side controlled price action. Predominance of supply side candles. There's just more black candles than there are white ones. That's as simple as you could put that. And with the short-term trend ribbon down and seemingly doing its job now for impeding the price action. This is obviously it's a ZRP for me, and that's it. I think I'm not looking to short this one because it's not below the long-term trend ribbon yet. So it's ZRP for me. What I'm just going to do first ones at this stage, Ryan, obviously to try and get through as many as possible. ORA. This one I would skip past very quickly because I don't think you've seen this one in too many times. I think it got a bit of a Guernsey here in downtrends, but I don't think it's been in since then. It's just vibrating around this trend ribbon, and I find that thoroughly uninteresting. But apart from the fact I find it thoroughly uninteresting, and again, when I see that sort of volatility, I'm a trend follower, okay? A trend follower needs trends. So that is a big put off. We talked about wanting to find consensus in the market. Do we have a consensus here? Demand side wants to be in. They're taking their cash. They're buying like crazy. They want to own shares. Supply side, they want to be in. They're refusing cash. Demand side saying, here's my cash, take my money, take my money. And the supply side, no, I don't want your money, man. I've got these shares. They're way better than money. Is that what we're seeing here? We're seeing, I don't know, like people can't decide. Investors can't decide here. So if they can't decide, why would I be able to decide? I can't decide. I think with these last few candles, if I had it, and I don't, I can't own it, but if I had it, I could get to an equals R, but I'm certainly not a plus R yet. It would need to break through this funk. It's in a trading range, and let me see it move to the top of that trading range, and then I might be interested. But even then, if we get through there, there's probably supply all the way up here. The words thoroughly uninteresting are ringing in my mind here. Sorry if that's your favourite stock, Arjuna. Let's go to APA. This one's been in the list so many times for obvious reasons. It is the low volatility uptrend, and they're a little bit boring, but sometimes boring is also very beautiful. And I think that's sums up APA pretty well. So with everything looking like demand side control, obviously if I had it, happy to own it. And if I didn't have it, then I could consider it to go into my bucket. And that's all we're doing here with every one of these charts. And they're just charts to me. They're just pixels, black and white pixels. Some of them are green or pink. And the other thing, I can't do this on here, but I wish I could. I wish I could delete that because this is so irrelevant. The price is irrelevant. Oh, I can't buy APA here, Cole. I sold them at $6. I can't buy them now. If I buy them now, they're going to go straight back down. Stop thinking it. You are anchoring yourself to something that is irrelevant because the market doesn't care where you got out of APA. SER. Oh, this is interesting. I don't mind this one. And I think your typical, tie jacket broker would probably say, no, you can't. Just got no cash flows. It's cash flow negative, or it doesn't, or it's, mate, I don't care. I don't care what it does. Again, they're just pixels to me. All I care about is if other people care about it. Now, I'm not saying this is a screaming buy. It's clearly a turnaround setup, but it is a turnaround setup, okay? And don't get me wrong, it's probably a piece of junk. But every piece of junk in Australia eventually has its day, right? And this could be this piece of junk's day. God, how dare you? Interaction here. Can't consider it through here. Now it starts to get interesting, and it's getting interesting down here because we're actually seeing some interest in the volume. So here it's in a coma, no interest, right? Volume is like the stereo, like the knob on your stereo. When the volume is down low, nobody can hear it, right? You're listening, but nobody else is listening. You turn that volume up, doosh, 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 doosh. People across the road go, oh, there's a party over there. Let's go check it out. Hey, without the volume, these little pieces of junk are nothing. Once that volume starts to pin, you're going to see it happen, and the volatility, upside volatility, and then the interaction with the trend ribbon, it becomes interesting. And that's where this is for me. If I had it, certainly I would hold it on the basis that something interesting is going on, and if I didn't have it, I could consider buying it. Now, keep in mind, we're not going to go and... Dear to whom it is concerned at ASIC, Carl Capolingua told me to put my entire superannuation fund on strategic energy resources at 1.2 cents, and now it's at half a cent, and I've lost all my super. Okay, that's just silly, isn't it? Let's do A2M. We've obviously done some work on this recently. We were plus R, happy to add risk. I'm still there. There's a little bit of a supply side challenge here, but I don't think it's so sinister yet that I would manage my risk just at this stage. It's also coming in at a really logical point. So I'd be surprised if we didn't see some supply side interaction with this area at 980. And it's not just 980, it's the fact it's $10 as well. Okay, so we're at a big round number for A2 Milk, which from memory has been here before. It has, but so long ago that I think 10 is fresh in the new investor's mind. So I think this is okay still. That's my opinion. And I know you could argue, Carl, the price action isn't great. And look, the price action has turned, and we're watching that, we're monitoring it. And I think, if it closed beneath today's shadow is really important. It's telling me that the short-term trend ribbon is doing its job still. Oh, not there. Let's undo that one. But it's doing its job, potentially. And if we get that close, I think that's a good candle today. It moves it more back into the MOTN to go up and have another test. And you've got to think about this point of supply. It's like a brick wall, really. It's supply is up here. Latent supply or excess supply. It's just sitting up there. But each time we go up, we interact with it. And we hit that. Imagine we've got, I don't know, a tank. All right, maybe that's too strong. But we hit the wall. As a tank will probably go through the wall. But we hit the wall, and it doesn't fall over. But we loosen it. We break it up. The mortar starts to come loose. We hit the wall. The demand hits the wall a second time, and it gets a bit weaker. And then we get through. We've removed the supply at that level, and now we're open to moving higher. All the people who only thought A2 milk could only go this high, they're now out of the market. They're out of the market. They're in cash, and they're all going, oh, I knew I shouldn't have sold A2 milk. This thing's going to $20, which is good for us because now they're part of the demand side. And we know demand is not worried now. They're moving to $9.80, $10 and beyond. They're still thinking this is going to $20. We're not there yet, but can I reiterate? I know there's a few things going on that screen. Oh, look, I'm still plus R. I'm not going to add R yet. Okay, let's just leave it at that. I want to see, let's move back into rising peaks and rising troughs. Let's see a nice big white candle near the point of supply. I don't need the breakout. We talked about that last week. I don't have to wait for a breakout. I just need to be convinced that more often than not, that wall of supply is weak enough for it to get through on the next go. I want to be in before that breaks because everybody else is going to be buying the breakout. Why? Oh, technical analysis 101, wait for the breakout. No, I want to be in before that. And the candles will tell me when it's ready. Let's do 360 from Arjuna, and then we're going to go to the bottom of the list, work our way up, and we'll do 5 more after this one. This, again, a really nice trend, unfortunately, that has come undone, and as good as it was, no trends last forever. And that's why we are active and proactive in applying the methodology. And again, I can't make this stuff up, but point of supply lower than the other one, point of demand breaking through, candles start to change color, moving beneath the short-term trend ribbon, short-term trend ribbon changes color. There's clearly some issues here. We've gone from demand side control into equilibrium. Okay, and the question mark was I don't think the answer we've had the definitive answer yet, but the question mark is supply side control. But it's starting to look more that way. I think you'll agree when I say that my model is ZRP on this one, okay? And it's more likely moving towards, a minus R. If I had it, I'd be moving towards minus R anyway, but we could have some issues here if this trend ribbon starts to turn amber and we start to do stuff like this. I would be really concerned. Okay, so my model says ZRP. It's not me telling you to do anything. It's just saying my model says ZRP. It's so obvious it cannot be any clearer than that. That is just what a technical analysis model is saying. Andrew's saying maybe it was your stockbroker wanting to tell you about a fabulous opportunity. Yes, it probably was. My brokers, I used to use a full service broker back in the day. I think saw James Capel here in Perth. They got acquired by someone who can't remember, and the first hot tip I got was Equinox Resources. It was about 20-something cents. It's back early 90s, and then that did nothing for so long. And I held it and I watched it every day. Oh, it's gone up 0.5%, it's gone down 0.5%. I mean, I would have been in my late teens, still at uni, checking the teletext, if anybody remembers, and didn't go anywhere. I sold it, and then of course it doubled overnight. But then he did give me Helix, which actually went up. So there you go. It's not bad. 1 out of 2. Let's go to Love Your Style, Carl. Can you look at NRW? I can. I think it looks fantastic because it's a picture of demand side control. Had a little bit of a pullback here, but don't forget that's when the market was a bit rubbish as well. Although having said that, it was probably not beating the market, but it's starting to move back up here. Nothing really interesting or sinister going on in the volume. A little bit of an above average day, which I like to see. So what I'm looking at here is this above average here, a little bit above average actually to get it going. So think about this for a second, because volume is the most misunderstood concept in technical analysis. Price action's good, and we get a bit more volume on this day. Why Why is this day starting to experience, the demand side is there, but why is the demand side starting to see more volume, more supply come in on this day? Okay, because it's interacting here. This extra volume is the interaction of that supply. And if we can see that the demand side remains motivated in the face of that elevated supply, then that's a good thing. And that's why when we're looking at breakouts or approaching major points of supply, to see higher volume with strong candles, it is actually a good thing. Now, here's the other thing. In the technical analysis books, they say that you want to see the price going up at high volume, which is pretty much the dumbest thing you could possibly say. You don't want to see the price going up at high volume. Once you break out, so once you're up here, you want to see the price go up on as little volume as possible. Once you're in this phase, if the volume starts to appear, that's when there's a problem. And I'm not going to explain why. That's homework for next week. I'll explain it next week. I want you to think about it, because a lot of people who wrote a lot of technical analysis books never just thought about it. Let's go to SVL, and then I think I've got 3 more after this. Let's go Zoom, normal. We've got some issues here. Look, it's not a train wreck. It's not the worst one we've seen today. And I could add some risk to this if it starts to do this again, but it's not there. It's not there yet. So look, I'm at equals R if I had it, and I don't have it. You can see why I don't have it, but I can see a path here to improvement. Okay, so and if I can see that path to improvement, then I can say something like, well, if I had it, I'd hold it. So still some more work to be done, and that's your work now. Okay, you know the system, and you just go and apply it every day. Look at the next candle. Look at the price action. Look at the trends. See how they develop, and you should be able to answer your question. Did I say 2 more or 3 more? Let's do Droneshield and then see where we go from there. I can do this one very quickly. I don't need to explain why anymore. I can just go ZRP. Okay, I think we all agree, and you can see we've actually done this in the past where we were reducing risk, and I've changed these to just minus R, but we were talking about reducing, we said even plus R up here. So that day there it would have been plus R. On that day there, I would have been happy, well, maybe not happy to add risk just with that black candle, but if I did, I wouldn't regret it. But by here, that risk is coming out. I would have lost money on that risk. Would have lost money on that risk, 100% going to lose. You're going to lose at some stage. But then I think you can see pretty quickly, would have gone to the 0 risk position. That's where we still are on Droneshield. 2 more now. Actually, before I go, and don't worry, I'll still do 2 more. I wanted to talk to you about this. So this is, because I mentioned I'll hang around after the session. So this is one of the benefits of being live in session. We stop the recording and we have a bit more of a chat. But a few weeks ago, somebody asked, Carl, what training books should I get to learn more about the way you do things? And the good news is I wrote the article for you on it. So these are my six best trading books. Not investing. Warren Buffett's The Snowball is not here. Benjamin Graham's The Intelligent Investor is not here. Okay, these are for traders. Stan Weinstein's Secrets for Profiting in Bull Bear Markets, the only book on technical analysis you'll ever need to read until I write mine. How I Made $2 Million in the Market by Nicholas Davis. Sounds like a corny title, but it's a brilliant book. And some of what I actually do is very similar to that. Trade Your Way to Financial Freedom was the first book to really solidify. I had some ideas on risk management, but this really, I think, solidified it for me. You can see it was released all the way back in 1998. Trading in the Zone, brilliant book about your mindset, obviously, and the basis of my I can't tell the future, so stop worrying about it approach. Okay, meeting Mark. I met Mark in 2011. We were both presenting at a conference in Hawaii. I can tell you he was the big name on the bill, and I wasn't. But we got talking, and he's a brilliant man, generous man. He's no longer with us, unfortunately. But yeah, that's what I took away from him, is this idea that you have no idea what the next print is be. It's very random, and therefore why obsess about something you can't control, and that's a random outcome. Market Wizards, absolutely pivotal in my trading investing development. Market Wizards and then Reminiscences of a Stock Orora it's just a classic read. But I'll let you read the article. I don't want to waste any more of your time. I'm going to head back here and finish the list for today. Anonymous saying, can I find and install the OTR? No, you can't. The OTR doesn't exist, but I've given you some alternatives. Use the ATR with a period of 1 setting and it'll work just as well. You can't get the RSC either because they're mine and I'm not sharing them at this stage. Charles says he wants to learn more about shorting. I think you should. GMD, and then DAI, and we're finished for the day. GMD, this one is for May. Still looks solid. Clearly, it's not in this phase anymore. Okay, we are potentially moving into the equilibrium phase, so we should be just more alert. Okay. Could I be back to a full risk position here? I don't think so. Some of the other gold stocks are probably warranting, well, not probably, they are warranting being back to plus R. And I don't think this one is there just yet. Maybe it got a little bit close here, but you can see that candle is not as emphatic as some of the other candles that we saw before that did get in the list. And this candle certainly is not doing it for me, and neither is this one. If anything, we might still be seeing the effects of this major point of supply that has been formed, and some of the latent supply that's still working in the system. Now, this is not a write-off by any stretch of the imagination, because we've got a nice solid motive phase through here, and we're in what could be just a very shallow pullback, and then the next move through there. And if I get a nice big white candle, and you'll know the candle, you already think I already think you are picturing in your mind the candle that I want to see. Don't worry, it's not red, it's going to change colour. Then certainly I could entertain going back to plus R on this one. In the meantime, I am still at equals R. I think happy to maintain risk on the basis that the short-term trend ribbon is still good. It's trying to get back to supporting price. Long-term trend is up, decent price action recently, and moving back to a predominance of demand-side candles. You know, if I had to give this a score out of 10, you should be trying to score out of 10 based upon all the stuff I've taught you. You know, it's probably a 7 at this stage, maybe a 6.5, maybe 7. Is it 10 out of 10? Is it going to be banging down my door to be part of my bucket? No, it's not there, but not there yet. It's just a matter of watching the candles to see it develops, or it might not develop. We might end up moving into lower peaks and lower troughs beneath the trend ribbon, strong supply side candles, and then we move into more of a minus R phase. Okay, so just equals R for now, and then the final one for today is DAI, which is pretty similar in that there's some good things happening here, but for me, not warranting adding risk just at this stage. So this is interesting. We're obviously trying to hold that long-term trend ribbon, the trend ribbon doing its job. Is it fair to say predominance still of black candles? The price action is not ideal. We're seeing the downward motive phase is much greater than the upward motive phases, just certainly on that last run. And the candles, you know, as I said, still lacking. Today's candle is very interesting. No volume really about it at this stage, and we're not in that phase where we want to see low volume. We want to see higher volume now on white candles, because it's speaking to supply removal. So when we're beneath the point of supply, we want to see that high volume, because we need to trade with that supply. The supply is there, and the only way to get rid of that supply is to trade with them. So we need lots of demand to beat up lots of supply, and lots of demand and lots of supply means lots of volume. Okay, so quite a bit more needs to be done. Higher peaks and higher troughs, continuing demand side candles. I don't need it to break above here, but I need it to get pretty close to it with a nice big white candle to convince me that the supply that is clearly in the system has been dealt with. It's been consumed. We're not there yet. I don't have it, obviously. I can't have it. If I had it, could I go equals R? Okay, let's go equals R just, and it wouldn't be until up here that I could even contemplate plus R, but that is still a question mark. I don't want people to go back and say, oh well, that's where you said I'd add risk. No, that's still very much a question for me, and certainly down here, just some guide posts on how this equals R, present equals R dynamic changes. Okay, that's all we're going to get to today, ladies and gentlemen. Apologies if I didn't get to yours, but hopefully it was still worth your while hanging around. If you're listening in the recording, make sure you subscribe to get notified of any future updates, and hit the like button. Really important for me to see that you're liking what I'm doing, so I know I'm on the right track. If you are in the recording, scroll down, and in the comments below the recording, you'll see a link to request my trend ribbons on TradingView. It's important to know that you don't need a paid subscription for TradingView. You can just get the free account, and you can still view charts using those ribbons. So don't think you have to spend hundreds and hundreds of dollars. Fill out the form, send me your TradingView username, and I can add access. For everybody that is listening, I have actioned all of the requests up to this point. Please don't fill the form out 10 times. That's very annoying. Just fill it out once. Apart from that, ladies and gentlemen, it has been an absolute pleasure chatting with you today. Hopefully you learned lots, and hopefully you're going to go off and look at some charts after this. All the best for your trading and investing. Until we catch up again, bye-bye for now.